Well, the market wrapping up a tough week, so the big question now, where are we headed from here? Let's get to the chart master, Carter Worth, with some key levels to watch. Hey, Carter.
As always, anybody's guess. That's what makes a market, but let's do some guessing together. Can you draw lines? You can. There's a very well-defined, what you call an internal trend line on the S&P. This is a 2-year chart, and it is not random, yes, that this stopped literally to the penny, to the penny, to the penny. And after hitting those levels, of course, falling hard. So the real question is, are we in for more? If so, how much more? To be determined. Let's try to figure out some levels. So there are the arrows that I've drawn. And again, I'm expecting a little bit. It doesn't have to necessarily be this big or that big, but we're only this big so far. I just don't think you're going to kind of get away with just that. So presumptively more like this. Where might it go? Let's just figure it out a couple ways. So support is not an absolute level. It's a little bit like a mattress top. You sink into support, and at some point, you find support. So this is a range of support, and were we to get to the bottom, you see the green line here, that would be a 5% peak to trough. We're down 3.76 from peak to trough, so that would be one reference point. Another reference point would be, of course, the level you all were talking about, the lows of June 1. We had the May sell-off, and were you to get down to exactly that low, that's around 27.20, that would be a 10% decline. And those all have to be considered reasonable. In fact, those are garden variety things that used to happen all the time in markets. Now, of course, we dropped 3% from all-time high, and you'd think the world was ending.
Yeah, well, it felt turbulent this week. Carter, thank you. That's Carter Worth. We'll see you later on Options Action.
So can we start out this segment?
Can you stay with the mattress metaphor?
I love that.
Is it
falling to support?
Is it a Tempur-Pedic?
I was just memory foam.
No.
It's time for some memory.
Lift it back up.
That's where I was going.
So we started out the segment. The question was, do you buy now or do you wait for it to come back a little bit? And I think you have to remember that obviously the stock market is made up of stocks, and I think there's one really important stock, and it's Apple. It's the A in my MAGA right there. Because,
yeah, well, it's a market of stocks.
So one of the things that's really interesting, we were just talking about that May sell-off. In May 1st, when Apple reported, the stock gapped up. It was up like 6-7% or something, gave it back. Look at that chart right there. And then we had all that trade volatility, downward volatility. Apple stock sold off 20%, far greater than the 7% in the S&P 500. When you look at the gap, this was the last mega cap stock to report. Again, had a gap. It was reversed. It reversed 8% from those highs. And I think it's really important to remember, if you're thinking about where to buy a good story like Apple, because it's had 2 decent quarters, you can still get an overshot to the downside greater than that of the broad market. And so you got to figure out, you don't go buy that today.
But
you wait for a level of where you buy it a little bit lower.
To stay where Carter was, if you look at the macro on the bottoms, we bounced off there like a coiled spring coming off the bottom. There you go.
Nice job, Steve.
Coming off the bottom there. So a lot of times you're trying to pick the bottoms in this, but every bottom has been bought recently and longer term.
What happens if there's one that isn't?
Well, I mean, then the show's over. So the whole idea is that in the longer term, historically, the market's rally.
So you're a buyer of stocks today?
Am I a buyer of stocks?
Yeah.
I think that you're getting some bargains in a lot of the semis. I think that you have to wait for further bargains. I think that you could see that 27.90 low in the S&P, but I do think that would be overdone.
Treasuries are overbought. So if you want to take a trader's view, at least on short term, I do think I won't try to see its crystal ball on what happens this weekend on the press between the trade war. But I will say, if you look at some levels, copper was down 3.5% today. That was an overshoot. Treasury yields 24 basis points in the last day and a half is an overshoot. And I think markets right now are coming off of a week. You teed it up earlier, Scott. Was not supposed to be a great week. I'm not sure this week was set up to be a good week based upon how we came in.
It wasn't supposed to be like this. Right? It may not have been a great week because who knows? A lot of it was built in for the Fed.
We didn't expect the tweet. But we should have expected.
You didn't expect the worst week of the year with a Fed meeting coming that there was going to be a rate cut.
Well, you had the ability, to Timmy's point, you had the ability on a sell the news event. So what now? You had that ability, and then you got that. It shocked everyone the next day when the market rallied.
You didn't think we were going to roll off the mattress and hit the floor?
Well, I tell you what, I didn't think the mattress was going to have a lot of spring to it, but I do think that the Fed ultimately, sound effects, was something that actually set us up for a difficult week.